Hey, good morning, everybody. It's Hammer. Today is Tuesday, October 7th, 2025. I, of course, am Hammer here with your daily mortgage update. The place on the web where we get together at 9:30 a.m. Eastern Time, talk about what's going on in the mortgage world, what's going on with interest rates and pricing, all that good stuff. Rates and pricing, a little bit boring today, so we're going to go into some of the other stuff. If you're here this morning, say good morning. If you're watching on the replay, go ahead and give me hashtag replay in the comments. I see many of you doing that on Facebook and YouTube. I appreciate it. It does matter. Also, if you're watching on the replay, go ahead and comment along. Let me hear what you have to say on some of the other stuff. I do go back and read those. And if you would like a reminder, if you'd like to join me live, maybe you want a quick text reminder on your cell phone, you can go ahead and sign up at hmmr.io/reminder or use this cool QR code over here, hmmr.io/reminder, or use that cool QR code. And we will go ahead and send you a text alert that I am going live each day. Also, if you'd like to sign up for our email, we can send out the daily email. It goes out from hammer@ratesensei.com. You can sign up for that at ratelockadvice.com or use this cool QR code over here. If you would like to sign up for our text alerts, $7 a month. Couple times a day, we're going to send you a text to let you know what's going on with the markets. If there is concerns about reprices, we're going to send you an alert, help you protect your pipeline. You don't have to spend – a lot of these services have gotten expensive. You know, when I got started with Rate Alert back in 2010, it was $30 a month. Now these services are I don't even know how much MBS Live is. I think it's like 50 or 60 a month, and Barry's is a whole plethora of tools. So it's more. And but if you just want something easy, check out our text alert. So anyway, I'm doing a lot of talking today, and but that's what I'm doing. I'm doing a lot of talking. So if you're here this morning, say good morning and let me know that you're here. Let's go ahead and say hi to the live folks, and then we'll jump into all the heavy stuff. Good morning, Tim Klyla. Great to see you, sir. Kyle Mazikas, great to have you here. Randy Tiekle, Megan Bissell, great to have you here as well. Michael Love, Will Patterson. Follow his lead. He is tagging other originators. He was tagging other originators. Thank you, dude. Appreciate that. Allison Foy, good morning. Ron Siegel says today is National Taco Day, and it's Taco Tuesday. So let me know in the comments. You know what? Let me know who else grew up on white people tacos. I know you're not supposed to say that, but I'm a white person. I grew up on white people tacos. Those were the hard shell, old El Paso yellow box kits. You had ground beef, which is really salty with their taco mixture. We had Old El Paso refried beans, still a favorite of mine. And then you would have like tomatoes, shredded lettuce, some shredded cheese, some sour cream. We didn't even have salsa. It was just that. Who else grew up with white people tacos? Let me know in the comments. Would love to know. Now it's all the rage to have real tacos. And also, it seems like every other restaurant that opens around here these days is a Mexican restaurant. And most of them aren't even that good. So, but anyway, let us know in the comments. And what's your favorite taco? Tacos are crazy now. You can have all kinds of tacos. So let me know in the comments. Jerry Avila, good to see you, my man. Robert Bashir, funny the feed starts on Facebook before YouTube. Yeah, it's all on how it just does its thing. I use Restream. So good morning, Faye Strange. Great to have you here. Rob Stewart, good to see you. Matt Rasner, Rob Smith. That's right, Randy. Taco Tuesday, baby. Good morning, Leroy Romero. Hope you and your lovely bride are doing well. Bill Stevens, Angela Walters. Good morning, Zelinki. Vicky McSweeney, great to have you here. Almost as bad as credit report costs over the years. Yeah, exactly. That's my team. They always want to know why I'm a genius, and I say because I hammer. Awesome. Well, I appreciate that, man. You're giving me way too much credit. Tacos for dinner are patriotic duty, National Taco Day. That's right. And yeah, there you are. Here's my white people taco people: Vicky McSweeney, Dave Zelinki, Allison Foy. We had those white people tacos. It's fun. So Dev Dickinson, good to have you. All right, let's get into it. We'll start out with the regular rate stuff, and then we'll talk about all the headlines this morning. And because there's actually more going on in headlines than there are in anything else. So quick recap of what we got going on here. Let's zoom into this and see if we can. Let me refresh it so it can. And I got it. There you are. All right. So taking a look here, let's get some Presentify going. Oh, hold on. That was the wrong set of keys. Close that out. Here we go. Presentify. All right. So taking a look here with Presentify, pricing came out. We were kind of at the peak of the morning, and then it lost ground on the day. However, it looks worse than it was. There really wasn't much of a loss here at all. There were, I don't even think I saw a single reprice worse on the day. And then we recovered a little bit here, ended the day kind of about the same as where we were pricing came out. That's where we're at today. Pricing came out, we're a couple of basis points lower than pricing came out yesterday. So we're not going to see much happening today. Rate sheets are basically going to be unchanged. Very little, if any, changes there. Taking a look at the 10-year Treasury yield, you're seeing the same story, 4.15 right now, 4.15. This was the peak at 4.18. Hopefully we won't hit that again, but we are staying below there. Nothing to worry about on that. Take a look here at the Japanese candlestick chart. You'll see bonds went up last week. It looked like we were going to improve, and then we kind of lost that ground, and we've kind of gone flat. As far as flat goes, today there's basically no reprice risk. No reason at all we have to really worry about seeing anything. Bonds are just going to drift today. When we look at the regular headlines and what's going on in the world, there's not much of anything that's happening right now. I hate when it does that. Hold on a minute. I'll pull this over and we'll kind of go over some of that stuff, but there really isn't much of anything that is going on. Here we are. Now there we go. Okay. Let me get that a little bit bigger. All right. So there's really nothing we have to worry about. As far as the outlook, we had all that talk about, the shutdown, and we saw the improvement last week. Right here, you can see it in mortgage-backed securities. We saw the improvement last week where things did go up. And again, going up is good for mortgage rates and pricing right here. So we saw it where it went up on the week, up through Thursday, and we capped out right here, and then we crapped out on Friday. This was all the speculation. Oh my goodness, the government shutdown, it's going to weaken the economy, it's going to whatever. Nobody cares. Who does care? The people not getting paychecks. But as far as like the big picture, I mean, you barely even see, there's one article about this on Bloomberg this morning. Trump opens the door to talks. GOP has resisted as the shutdown extends. President Donald Trump showed signs of cracking, sending mixed messages about the state of talk with Democrats and their biggest demand, which is related to the healthcare subsidies and the ACA. Trump said he was open to negotiating with Democrats over healthcare subsidies. And again, what's funny is it's always Democrats and Trump. It's not the GOP. So this is not a dig. It's just an observation. It's kind of noticing the perception, the power perception. The shutdown has closed the government outside of essential services, left hundreds of thousands of Americans without pay and limited access to government services, with lawmakers on both sides unsure if Trump's remarks represented a genuine breakthrough. Now, I may not be spending time on social media in the right places, but it doesn't look like anybody has really complained about this yet. Again, as people don't get paychecks, we'll see more of that, but not really worried about it. So despite all this talk about how this is going to affect everything, it really hasn't. And the other thing to take into account here is markets are pricing in a October Fed rate cut. That's terrible. 93%. So markets believe we're going to see a rate cut at the end of the month. And in December, This would be one rate cut right here. This would be just the single rate cut. So there's a 20% chance that we wouldn't see another cut, but markets are pricing in an 80% expectation that we're going to see a second cut. There's really not much. I mean, you could see this go into this column, and it arguably would help mortgage rates a little bit. But overall, there's really not much of a reason to see rates improve. I mean, look at this, where we're at 6.38, 6.38. This is where we're at 6.38. Where were we? Slightly better, 6.37, 6.37, 6.37, right? Here we were slightly better with 6.34, 6.36, and then slightly worse at 6.39. I mean, but at the end of the day, rates have not moved. We're really not seeing much going on there. So Randy called it the cry wolf effect. Seen it before. Dave Zelinky, how come we don't hear about other countries like the UK government shut down over budget ceilings? Their governments run totally different than ours, dude. They don't have a two-party system. They've got a full parliament, and they're just as dysfunctional, if not more, than we are. Remember, France just got rid of their prime minister. France prime ministers. How many have they had in the last few months? Prime minister. Okay. He resigned. Where's the article? Let's see. Either the Wall Street Journal or Bloomberg. I was looking to see. But, we'll see what NBC. I thought it was CNBC. We'll see. He's been he resigned in less than a month, and I think they've had 4. Growing pressure, resign, blah blah blah. 5 prime ministers in less than 2 years. So they're just as dysfunctional as we are, just in a different way. So the Burbank airport closed yesterday as air traffic controllers got sick, maybe sick of working without pay. Yeah, that's what they kind of do with that passive aggressive, but they're going to get paid. I mean, the money is not coming in immediately. And I'm not saying that, unfortunately, people aren't living paycheck to paycheck and that this doesn't affect them. It does. But they are going to get paid. It's not like they're expected to work for free. So, but if I don't know, the whole thing is just broken. Let's go into some of let's talk about some of the other stuff though. So Fannie and Freddie, this one's been one that that I kind of wanted to go over. Is you've got, all right, big banks woo Trump for roles in blockbuster IPO. I don't know how this is going to affect things, but it is going to affect things. So Fannie and Freddie are doing an IPO and going public. Right before the shutdown, I know they were working on that. And all these banks are basically sucking up to Trump because there is so much money that is going to be made on this. They're talking about the government making $30 billion, right? Trump officials have been envisioning IPOs value the combined firms at roughly $500 billion and raise roughly $30 billion. The Wall Street Journal previously reported, while Fannie and Freddie could have separate offerings, if they raised that amount together, it would eclipse the Saudi Arabia Aramco IPO is the largest offering ever. Now, what I'm not quite sure about is the effect that this would have. So, You've got Pulte in here on this one, and he's involved in this. Again, you guys know, I know he's speaking at AIM, but I don't have a high opinion of the guy. Obviously Barry does. I mean, he did a talk with him, and they're friendly, but I don't, and again, probably he comes from a lot more money than I do. He probably made a lot more money than I have, if that's your gauge for success. I just think that he's an imbecile, though. We'll see where this goes. And, they don't want it to affect, and I'm not quite sure how it would. I'll have to do some research on this. But it says some industry players worry poorly conceived IPOs could send mortgage rates up, which Bessent has stressed needs to be avoided. I don't quite know how that would happen. I don't see how the stock prices or how Fannie and Freddie's performance would affect mortgage-backed securities, but maybe they do. If anyone's got any feedback on that, put it in the comments. Let me know what you guys come up on that. So that's, of course, one of the big things We've also got, let's see, OpenAI. ChatGPT users connect with Spotify and Zillow in the app. So you're going to see AI take a big, big role difference in the industry. It's a big search thing. And again, I'm going to throw this up there and do a little promotion. Originator success is about building your online brand, getting loans online, being found on Google search when someone's looking for mortgage lenders and mortgage brokers and mortgage information. And we have also doubled down into the AI arena. We are very aggressively working on how we keep our members being found in the AI arena. We're going to see, because this is going to be a big thing. People are going to AI search. You've got Gemini. Google has really pushed Gemini. That's their AI bot, and they've pushed that onto everything. Now, when you search for something, you've got AI mode right here. That's a big piece of what's going on. So, this stuff needs to be taken advantage of. Check out Originator Success. It's a few $100s a month. It does pay for itself. You will get loans from it, and there's no contracts and no setup fees. So, but yeah, this is a big thing, and I'm curious to see if you're able to, like, they don't show images, right? That's the thing about ChatGPT. It's still very graphical of an interface where it's still very text based for the graphic of the interface. I don't know how like a Zillow is going to do on there until they start bringing in more pictures. And I think that they will. I think we're going to see that evolution, and they'll be doing more in that. Yeah, that's a good point. What Ron's, going back on something I said before, Ron brought up, if Fannie and Freddie go public, then they have to work to maximize shareholder value. Some of the loan level price adjustments might change to stimulate sales. They're already greedy on the loan level price adjustments. We've seen that. The guarantee fees have gotten out of control. So a couple of other things to, look at. Again, I don't put on your big person pants, your big boy, big girl pants. We're going to talk about Trump here. Trump putting out there on Truth Social on Sunday, before I became president, OPEC kept oil prices high. It wasn't right for them to do that. But in a different form, it's being done again, this time by big home builders. I love the way that the big home builders of our nation, they're my friends, and they're very important to the success of our country. But now they get financing. They have to start building homes. They're sitting on 2 million empty lots, a record. I'm asking Fannie Mae and Freddie Mac to get big home builders going, and by doing so, help restore the American dream. Anyone else kind of rubbed the wrong way by this? So I get, like having the idea of building more homes and everything sounds great, but how is Fannie and Freddie I think builders already have an unfair advantage when it comes to financing. They don't have to follow a lot of the same rules that lenders and brokers have to follow. Who feels, raise your hand. Let me know in the comments. Give me a hand up emoji. Give me a thumbs up emoji. Give me a Y for yes, or go ahead and vent. Who thinks that builders already have a huge advantage when it comes to what they can offer and the baloney that they can pull with, giving a lower rate because they're basically making it up in the back end and all that stuff. Well, now could you imagine builder-specific programs for Fannie and Freddie? And that the lapdog is going to be tripping all over himself to do something for Trump. Trump did this, and now he's going to be all like, right? So he's, going to come up with something. And again, his family is a builder. Could you imagine if there were like loan level price adjustments for new construction and it dropped like a half a point or a point? Just think about that. Think about what that would do to originators. And these folks don't give a shit about originators. They don't care. I'm curious to see what could happen here. Yeah, there's Linky. They suck. I lost 3 loans to them. Michael Garcia, they steer the transaction. What's our next rate trend shaping event? Well, Randy, the closest thing we have to a rate shaping event right now is the government shutdown. When we get the economic data, the labor market data, and then remember, if this continues into next week, we won't get inflation data either. So when we get that stuff, we'll see what effect that has. But when you see what's already here, there's really not room for expectations unless we start looking into January. This is the idea of one rate cut right here. This is two rate cuts. This is three rate cuts from now. So if you would see when that data comes out, if it shows tremendous weakness and does something like this, that might be the next event. Otherwise, there isn't. That's why I said we're very much in a drifting spot. And let me throw the lock advice up there, by the way, since you asked. Bear with me. Let me grab it up here. So, nope, that's the wrong one. Lock advice. Here you go. So looking at the lock advice, I would be locking near term loans that are closing in the next couple of weeks, even though there's not a big sense of urgency. We're just not seeing any real move forward. Again, we saw it here. There was a very temporary improvement, but since then it's come back down and it's been flat. And it may increase, arguably, but I haven't seen concerns that this shutdown is hurting the economy. And I don't think there's a lot of room for improvement. We would need the spreads to get improved a little bit between the 10-year treasury yield and mortgage bonds in order to see rates really have even a little bit more room to improve. I don't see a lot of room, so I'd be locking on that stuff. Ron Siegel, I get a summary of DDB commentary. Ask ChatGPT to write the social media caption, then create the prompt for Nana Banana to generate the image. Examples are on my socials. Yeah, I'll check those out, dude. Builder smoke and mirror price incentives, the bane of pre-qualified folks not realizing. Exactly. And I think something like this, what do you guys think? Do you guys think that Fannie and Freddie, do you think this would be good for the industry, good for business? Do you think that maybe they'll do something? That would bug me if they did. And here's another thing. Again, this is under the art. This is just petty, and I don't like stuff like this. Fannie Mae and Freddie Mac announced plans to close New York offices over AG's practices. This is politics at its finest. And let's be very clear. It can be Republican politics. It could be Democrat politics. It doesn't matter because they all pull those politics. But, they're talking about pulling out. Now, obviously, what they said here is they said we're going to still employ New York residents. We're still going to continue to do mortgage loans in New York, of course. Well, of course. But going to eliminate our physical presence to the extent we have leases, we're going to be subleasing those, of course, for this. So this is just more of the ridiculousness. I'm not a fan of Letitia James, but the idea of saying, well, we're going to go ahead and pull out of New York because of her, I don't know. It doesn't sit well with me. Let me know in the comments how you all feel about this one. So, but that's it. That's what we got going on today. There's really not much else in the headlines. Not like we're going to see much of a move. Again, I can't stress it enough. Things aren't going to move much in the, with this stuff going on here. So, Angela Walters said, good for the builders, not for originators or consumers because they're forced to use someone not looking out for them. I agree. I don't like it at all. You can understand them pulling out of New York. I live in California. Many are leaving here if they can. I don't. I don't think that. I think that it's a waste of money. You're talking about moving people, moving staff, disrupting services. These are not why decisions should be made. Not why decisions should be made. I'm from Kenya. Actually, I wasn't even from Kenya. I'm from Greenland. However, Greenland could be U.S. by then, right? So, but anyway, haven't heard any talk on that in a while. So that's it. It'll be calm, quiet, not really much stuff. We just got the regular headlines going on out there. Today's Tuesday. It's going to be a quiet week. I don't think there's any real reason to expect this shutdown thing to get broken up yet. And what's funny here, I'll show you one more article that did catch my attention real quick. Hold on a minute, let me pull the screen up. I just got to find the headline. It was no. Okay. This one. So, gold shines as investors hunt for havens. But you know what they're not taking as a haven? Bonds. Bonds are not a haven. Gold glitters as global political uncertainty leaves investors looking for haven assets. But does it really? I mean, gold, despite a small slip away from the keenly watched 4,000 an ounce level, I remember what was 1,200 an ounce, and that was a lot. Is that what it's up to? 4,000 an ounce? I wouldn't buy any gold jewelry. The U.S. government shut down a political crisis in France, inject uncertainty into markets. Goldman Sachs raised its December 2026 forecast for the metal to 4,900 an ounce. Citadel CEO Ken Griffin said it's really concerning. Investors are starting to view gold as a safer asset than the dollar. And there's no move to bonds. We're not seeing any move to bonds on this one. So, yeah, but that's always been the case, Ron. Where New York people escape to Florida. If what's his name, the socialist, if he wins, you'll see more of that for sure. Yeah, gold's always at an all-time high, Dave. It's just that how high it is insane. Yeah, no. As far as Lincoln, California, you're absolutely right. I agree, but it's a different political environment on that one. So, all right, my friends. Well, thank you for joining me again. Sorry it's so boring about the rate stuff. We're not going to see much moves. So this is about as good as it gets. Now it's just about having conversation to get out there and get people to give you business. So, all right, have a great day. I'll see you guys tomorrow. Take care, everybody. Bye-bye.